This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And we came into the session with a little bit of a bid in corn and beans, but giving that up. 385 to 386 has been our pivot pocket. This is kind of the middle of the range from the last month. We're now trending a little bit lower going into tomorrow's USDA report. 377 to 380 is a must-hold area for the bull camp. A technical close below here, I think, opens the door for a potential retest of those contract lows from September, 365 3/4. Now, if we were to get a friendly report and close out above that pivot pocket, 385 to 386, next level is 390 to 392. Above there, you start to spur some short covering from the funds and get a little bit more of a rally. So a lot hinging on tomorrow's USDA report out at 11 a.m. Central Time. Moving over to the soybean market. Soybeans, we like soybeans. I don't know that you got to be a buyer right here, right now. We're looking for a little bit more of a break. There's some technical support that's been holding well this week. 933 3/4 to 937. This was resistance back in the middle of December. It has been support since then. If we were to break down below here, I think that would lead to a whoosh towards 920, 925. At that point, I think there's value in soybeans. That represents the key Fibonacci retracement, 100-day moving average, as well as the 200-day moving average, and I think represents pretty good value here looking out over the near to intermediate term. Now, wrapping things up with the wheat market, Chicago wheat has been resilient for the better part of the last 4 months, marking higher lows and higher highs, kind of making a run at those June highs potentially. 573 to 575 was that double top high in June. I would like to be a seller up there if we got a push, but still kind of waiting to see if we can't get one more jolt higher, get us into overbought territory against technical resistance to be a seller. If you want to be long wheat, I suggest looking at the Kansas City contract. We still think there's quite a bit more value in that. If we get a close out above $5 here in the coming weeks, I think that could potentially spur a run higher towards the June highs in that contract, which come in a little bit closer towards 545. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.